Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday market webcast. Okay, so jobs report comes out a little less than an hour. It's about 7:35 a.m. Eastern time as I'm doing this. So 8:30 in the morning with the jobs report. I don't think it's going to be as big as a deal as the Fed on Wednesday, where you're talking about tapering and inflation and things like that, versus a jobs report that we got a pretty good look at earlier in the week with ADP and claims yesterday and things like that. But it always tends to be a volatile event. I would not game it. But the reality of this market is it continues to just step steadily to the upside. Dips get bought, things move to the upside. The bears couldn't get anything going yesterday. I mean, they couldn't get anything going at all. They tried barely off the open. It was not a good effort at all. It was a situation where they couldn't really get back even to the hourly mid-band initially, and then they took it up to new all-time highs. They've done 87 overnight. That was a good old-fashioned 3:30 a.m. Eastern time. Europe, builds a nice-looking 10 or 15 minutes of support right at 68, and off they go. It's the kind of move that you love to see at 3:30 in the afternoon instead of 3:30 in the morning. But you're not going to be in every inch of the tape, and some stuff you're going to be time zone challenged on. So if you're waking up right now and you're going like, oh man, that was like 20 handles from 68. It's like, yeah, it was. And you know what? You were asleep. So, don't woulda, shoulda, coulda stuff that you can't control. There's nothing you can do about that. We tried our best in the afternoon and even in the overnight to try to get into some kind of a long that we were going to be able to hold in a risk responsible way. For the walk up into the jobs report, because it was coming, but it was too whippy and too loose, and just I'm not going to hold something 6, 7, or 8 handles down in the hope that a thesis is going to play out. That's just not how we trade. You can get yourself into a lot of trouble doing that. Just ask anybody who's been short with a thesis and adding. And if anybody wants to hear that rant, watch yesterday's webcast. So 4,700 is wide open to print. 4,700, 4,710, 4,713, those are all areas that are there once we get there, if they can push through. What I would say to the bulls is, if you're going to have a positive reaction to jobs, it needs to be something that is strong. Like you can't just do another weak little day of. I mean, yesterday the reality was we went up internally. There was nothing going on, and I talked about this in the room yesterday. So the advanced decline line was right around the zero line. It was negative most of the day, and prices going straight up. Don't let internals like that keep you from doing what you should be doing, which is following price and being long. So we're long, and we're in good runners, and we're making our day, and we're doing all this other stuff. And internally, there's nothing going on. Internally is never a reason to fade a market or ignore price. Don't get sucked into that. What I'm saying for today is, if the bulls are going to take it up today, it's my feeling that the internals are going to have to go with it. You're going to need some green stocks. You're going to need a lot more green stocks than red stocks. Otherwise, things are going to tend to get tired into Friday and come on in. Now, if it's a negative reaction to jobs, let's go to the hourly chart. So we had this consolidation, right? We expanded out of it, and now it's just been this steady bleed to the upside, okay? Hourly mid-band here, support. Every time it touches, you get support. So look, bears, if you're going to do this, you're going to have to do it correctly. So you're going to need a little bit of shock and awe down below the hourly midband, and then you're actually going to have to defend a lower high and then make a lower low. It's step 2 and step 3 that they have, they struggle with now, that they've struggled with for decades, okay? You can always knock it down. That's called profit taking, okay? People fall into the trap of thinking that because something starts to come in, 4 or 5 or 6 handles, oh, here it is, it's the big one. No, it's people taking profit, okay? It can come in. But then what's going to happen? They're going to buy the dip. This is when it gets important. So the dip gets bought. Okay, bears, now what are you going to do? You're going to lay down for 50 handles? Or are you going to defend a lower high? If you're going to defend a lower high, that's great. There's step 2, okay? Golf clap, all right? But you have to do step 3. So what's step 3? Step 3 is you have to break the prior low. If you break the prior low, you can actually get somewhere. If you don't break the prior low, then what you're building is a higher low or matching lows. They're really good at that. And then you're in some kind of a triangle situation where we're consolidating and it tends to break out later, or you're just plain going to lay down and then we'll just do what you really wanted to do in the first place. We'll just do it a little bit later in the day. So having it come off of an all-time high, not a big deal. How the bears react with step 2 and then step 3, that's everything. So if you get a negative reaction to jobs today, that's fine. And if there's a way to be short it, we'll be short. But the key is what happens after that. Do they defend the subsequent dip? And can they defend the subsequent dip, push it back down, and break the low of the initial dip? If they can do that, then that should seal off hourly mid-band, and that should get you back. That can get you back down here. But shoot, all we're really talking about, best case scenario, is probably where we were Thursday. I mean, here's your 9-day. Here's your pre-FOMC price. I mean, we've done like 70 handles. And it doesn't mean we can't do 70 more to the upside. Don't get caught in that game either. Oh, we've gone up enough. What does that mean? Says who? Who tapped you on the shoulder and gave you that memo? Because that just doesn't work. That's the whole contrarian fade thing. And I think all those people went broke like 5 years ago. So watch price, but understand price action if we pull in and what it means. It's that second move down that can really pay you if the bears get the job done. Otherwise, you know what? We'll just keep dripping to the upside, and that's okay too. Everybody have a fantastic day. Be safe, be healthy, take care, have a great weekend, trade them well. I'll talk to you Monday.